Perspective London. I'm Polly Middlehurst, and we're in the mining sector right now to talk to Phoevos Pouroulis, who's CEO of Tharisa. Hello to you, Phoevos. Good to talk to you. Some great results out today. How so?
Yeah, so listen, it's been an exceptional year, notwithstanding the effects of COVID-19. We've managed to really post some very, very impressive financial results on the back of a solid production year, in spite of some production delays due to COVID-19. And we're extremely pleased at the depth and resilience of the Tharisa team, our employees, and literally all stakeholders that have enabled this achievement. So a really strong set of financial results, year-on-year increases, importantly, profitability up to some $55 million, yielding an earnings per share of some 16.2 cents. That's a fourfold increase from the prior year. So very pleasing results.
And when you look at the backdrop that all companies have had to deal with, this COVID-19 pandemic that has blindsided a great number of companies, your little mining company seems to have come through very well. How have you done that?
So when we went through the various levels of lockdown in South Africa, due to the fact that we're a large-scale open pit mine, and inherent in our operations, we have social distancing because people are in large yellow fleet, we were able to continue operating, albeit on a partial basis, through the very stringent levels of lockdown in South Africa, and then with that, increase our production back up to full capacity relatively quickly as we moved through the various levels in South Africa. Coupled with that, we had a very, very buoyant platinum group metal basket price, up almost 60% year on year, with an average price of $1,700 per ounce, which really boosted our revenue line and our margins, yielding EBITDA of some $113 million, a big increase year on year. So through the combination of being able to operate throughout the lockdown of COVID-19 in a safe and responsible manner, and also the backdrop of a weakening South African rand against the US dollar, and the buoyant PGM prices really saw us coming through with a stellar performance.
You're in the precious metal space as well as the bulk commodity space, so also you've got a nice spread there, haven't you, which must have added some level of resilience.
Absolutely. So we're a co-product producer of platinum group metals and chrome concentrates, and we're in the top 10 producers, PGM producers globally, and top 5 chrome producers, a significant supplier into both those industries. I think platinum group metals has really been the outstanding performer in that both rhodium and palladium prices, of which are contained in our basket, have really rallied well, with an average price of around $8,400 for rhodium for last year, on the back of tightening emissions of noxious gases and more stringent emission standards globally. We've seen that price post our year-end almost double to above $16,000 an ounce. Now, while it's a small percent of our production, around 9.6%, it has a huge contribution to our revenue, some 51%. And to put it into context, South Africa supplies more than 80% of the world's primary rhodium supply. So with the curtailments in supply in South Africa, increasing emissions, we're starting to see a widening deficit of rhodium supply. And a very similar story with palladium, albeit that it's more globally diversified in terms of supply. The Russians are big suppliers of palladium, but we've seen a similar situation where supply constraints on the one hand and more stringent emission standards pulling on demand for palladium have seen that price hovering around $2,400 an ounce. So all in all, very positive outlook going forward as well, because we all know the world we're living in terms of increased emission standards, increased pollution control, and these very precious and valuable metals are irreplaceable in their function in terms of carbon monoxide cleaning, exhaust fumes, as well as noxious gases.
And all that success that you speak of, you've been keen as a company to pass back to the shareholders who've had faith in you, and good news on the dividend as well, Phoevos.
Yeah, absolutely. So we're very pleased that we're able to declare a full and final year dividend of 3.5 cents per share. And that's a big jump, a fourfold increase from last year. And what that means really is that we've exceeded our dividend policy, which is to pay out a minimum of 15% of net profit after tax to shareholders, and this equates to just over 17%. So I think in the world that we're living in, it's important that we practice capital discipline and return value to shareholders, as you rightfully say, who have been loyal and patient throughout, the volatility of the commodity sector.
So what's next then? What can we expect going into 2021 for quarters 1 through 4?
So we're given guidance that our production will increase for the next financial year, 2021, whereby we're looking at producing between 155 and 165,000 ounces of platinum group metals, up from the 142,000 this year. And similarly, 1.45 to 1.55 million tons of chrome, where we produced 1.35 million tons of chrome concentrates this year. So increased productivity, strong PGM basket prices, increasing margins, strong fundamentals around the stainless steel industry, which is the driver and demand for our chrome units. So all in all, positive year from the Tharisa mine. We're looking at expansion, we're looking at growth. We have some prospects in Zimbabwe on the Great Dyke that we're busy exploring and potentially provide very low cost PGM ounces and very, very valuable PGM basket price there as well. So a positive basis and foundation for us to grow into the new financial year, and looking forward to returning more value to stakeholders.
And in terms of strategic goals in the coming year, should there be anything that investors need to be aware of?
Yeah, absolutely. So we have started or restarted the construction of the Vulcan fine chrome recovery plant. This is around a $50 million capex investment. And this is really born out of research and development that we undertook in-house to recover fine chrome that historically in the industry has not been recoverable. So we're very pleased with the fact that we're in the construction phase of that processing plant, which in effect takes the tailings from our 2 existing plants and reprocesses the tailings for fine chrome recovery. And it will be an industry first, and we're very excited about that. But what it means for us is that with a very marginal operational cost, we increase our chrome concentrate production by some 25%. So material in terms of volume, but also bringing us lower on the cost curve, which is really the place we want to be.
Well, it's certainly looking like a rosy picture. Very well done to you and your colleagues. I'm sure investors are very happy with the dividend as well for the moment. Phoevos Pouroulis, thanks very much for talking to us.
Thank you very much, buddy. Have a good day.